Why do you still fail even with your whole trading knowledge? Because your foundation is wrong. You ignore ICT basic market structure. Today, you learn how to read it like a pro. Teach you how to identify strong and weak structure. By the end, you know why your structural reading is wrong. I'm victorsnow from Trading from the Soul, where ICT is simplified. Like and subscribe so you don't miss out on future videos. What are the core drivers of price delivery? Number one is we have a bullish trending market. This is what a bullish trending market looks like. All this was taught by ICT himself. You can check him out here on YouTube. I'm teaching ICT's concept from the foundation level up to the building level. This is the first topic. I'm giving it out here comprehensively. So we move from a low to a high, from a high to a low. Because this low is higher than this low, we name it a higher low. From this higher low to a higher high, because this high is higher than this particular high. Just imagine you're climbing a staircase. Anytime you step up to the next step, that's a higher high. You are going higher than before. So as long as you keep going step after step, you are in a bullish trending market. So from a higher high towards a higher low, from a higher low towards a higher high, from a higher high towards a higher low, then from a higher low towards a higher high. So what's the common thing you can get from this bullish trending market? Answer for me. Breaks of market structure. Whenever markets want to continue going to the upside, we make these breaks of market structure traders. So these are individual concepts you have to understand in detail so you don't make mistakes, because these are not what everybody says they are. Take for example, when I told my students to mark out an uptrending market for me, they ignored this and they also ignored this, which one little mistake can cost you a lot of money in the market. Don't miss this. Whenever price comes to break a higher low in the market, we are now in what we call a downtrending market, which ICT say that is the second core of price delivery. This is what a downtrending market looks like. Can you see? If you miss one particular step, just like my students would miss this, I was still thinking we are in an uptrending market. Can you see how market would took him out? Pay close attention from this part of this video to the end. A bearish trending market is when we move from a high, making a break of market structure, to a low, and from a low to a lower high, which is a high that is lower than this high. Then from a lower high, making a break of market structure to a lower low, which is a low that is lower than this low. From a lower low towards a lower high. Again, most traders will miss out on this one. I'll tell you why this is a market structure in a moment. So from a lower high, making a break of market structure towards a lower low traders, and from a lower low towards a lower high, and from a lower high towards a lower low. If we are unable to continue making this break of market structures that we are doing and finally come towards close above a lower high, we are now in a bullish trending market again. And this right here is called a market structure shift, as we've turned over from selling towards buying in the market. And this right here will be called a low, and this right here will be called a high. Whether you trade forex, crypto, stock, options, them it's synthetic, this is just the core driver of price delivery. So these are individual concepts you have to go through in details, but this is reversal. This is market structure shift. So you don't want to miss this bullish chart markup. This is good, the daily time frame. We're going to start from January down to this September that we are currently at to mark this up. We have a low. We anticipate this high to break before we can continue in a bullish trending market. Taking out these highs, are we going to call this a break of market structure? Answer. The answer is no. Traps I see traders do is they call this a break of market structure. We want a full candle close of these highs. Let's see whether we'll do that. And we got it. This is the difference between a sweep and a break of market structure. In a break of market structure, we expect market to continue in its uptrending market, while in a sweep, I expect to trade from this level to the downside. So this is for traders that think that this is a break of market structure. During the course of this ICT trading course that we're doing, I will show you how to trade from here to the downside. This next step cannot be ignored, which is how we mark out our higher low in the market. So most traders think marking out their higher low is a casual something they do. They just put their line like this. Some even put it like this. They think it is an area in the market. They treat it how they treat support and resistance levels in the market. A higher low is a point in the market, the lowest point price got to before making what? A break of market structure traders. Why this is important is market can do something like this, come back and break your area, and market will still continue going to the upside. So next is what? A higher high. A higher high is the highest price got to. Can be a wick or a candle. So we want price to form what? A higher low, so we can buy. We will do something like this. So we'll move our higher high from here to this level, expecting our highest point in market price got to grow. So here will be our new higher low, this will be our break, and this will be our higher high. We expect this higher low to be taken out if we want to sell to the downside. Assuming you didn't watch this video, you call this a market structure shift and you want to find a way to sell to the downside. This is a loss, and this is February 2025. So here will be our higher low, here will be our break, and here will be our higher high in the market. Let's see. So here will now be our new higher high. Here going to be our higher low. Here will be our break of market structure, and here will be our higher high in the market. You now see that all these little structures you ignore all counts in the market. So from this higher low to what? This higher high is our trading range in the market. Here you will see your liquidity zones, other block, institutional reference points, internal, external range liquidity. Can you see why we don't make mistakes with these basic structures in the market? If you want to learn how to trade these levels, watch a complete other block trading course after this video. So let's see what we have. So since here is unable to make a break of market structure, here going to be our new higher high in the market. We made a break of market structure. Here is our higher low, and here is our higher high. If we want to continue going up, I want to see price action come back to this level and break it. Okay. And we had what? A sweep. Second candle came and swept it again. Let's see whether we have a break. Third candle rejected it. And can you see what? We got our break in the market. Is this a break of market structure? Comment down below. I'm not going to say anything. Let the market call the results for us. So if you made here your break of market structure, it means that market's coming to break below this, your higher low is your market structure shift, and you would want to sell in the market. Listen, you lost the trade. I was buying when you were trying to sell in the market, because here is a weak structural level. The banks, when they watch this video, will not forgive me for reviewing this. But before that, give me a thumbs up and subscribe right now to support this movement of simplifying ICT for everyone. So strong and weak structural levels in the market, what are they? So this is your weak structure and this is your strong structure. Our weak structure, when this candle swept our higher high, our next candle couldn't break this wick that swept this our higher high in the market. Why in our strong structure, when this candle wick couldn't break higher high, we moved our higher high level from here to this level right here, and can you see the next candle what broke this our new higher high? And this is how I mark out my break of market structure. I'll connect the dots. A break of market structure. Here will be my higher low and here will be my higher high. Can you see why you keep failing? Because when you build a house on a weak foundation, no matter the costly strong things you put on top of the house, the foundation, it will definitely collapse. That's why no matter what you pay to learn ICT concepts, if you don't understand this basic, your trading career keeps on collapsing. Most of you will make mistake with this next step, which is bearish chart markup. This is usdjpy daily time frame. I'm going to be starting from 9th January this 2025 to mark it up for you guys. Whenever we come to what? Break what? A higher low. We have what we call a market structure shift. We'll shift our eyes from buys towards sells. And here will be a high, and here can be a low. To anticipate a lower high. But a lower high, can you see we are struggling to break here? All weak structures, and finally we got our break of market structure. So this is our break here, and we connect the dots. A break of market structure, lower low. This will be a lower high in the market. And we want what? A break, which we got right here, and here can be our lower low. And this right here is just like when we are climbing down a staircase. Whenever we want to start going up a staircase, we want to come and break this lower high in the market. Like and subscribe to this channel to support this movement of simplifying ICT for everyone. So this is just the beginning of this comprehensive ICT concept from the ground level to what? The building. Just open a playlist for it right now. I'm going to be teaching you guys like I'm restarting ICT over again, but by using 2025 examples. In episode 2 we talk about intermediate structural levels, but before that you can check out other related topics like this one right here, the one stupid SMC market structure strategy you ever need, which will prepare you for our next video. See you guys there right now.